Assalamualaikum warahmatullahi wabarakatuh. Today I would like to present about our company. Our company name is Thundersley Sport Shoes.
Okay, so I will explain about company information. First is organization chart. Our director is Muhammad bin Othman, and then the company secretary is Siti ZHAFYRAH binti AZROL. Administrative manager Nur ATIQAH binti Muhammad ASHAN. Me as a marketing manager, and Siti ZUBAIDAH binti SAZALI as a financial marketing.
As you can see, this is our auditors and company secretaries. This is the auditor's name, address, and telephone number, and this is company secretaries. This is the director profile. I am the director. My name is Muhammad bin Othman. My age is 30 years old and I am single. And my education is Bachelor at Accountancy in University Putra Malaysia in 2008. And my achievement is members of Association of Chartered Certified Accountant. My experience is accountant at Asia.
I am the company secretary. My name is Siti ZHAFYRAH binti AZROL. I am 25 years old and still single. I was graduated in Bachelor in Corporate Administration and Relations with honours at University Science Islam Malaysia. My achievement is I got Best Employee in a Year at Ariani in 2015. And my experience is I was a marketing manager in Ariani.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur ATIQAH binti Muhammad ASHAN. My age is 26 years old and I'm still single. I'm graduated from University of Dallas at USA in 2009 with Bachelor in Business Management and Marketing with Honors. I got a canteen for 3 semesters in a row. I experienced to conduct the business management.
Okay, my name is Syiham Ahlaa binti ASHRAF. I am a marketing manager in Thundersley company. I am 27 years old and I'm still single. I was bachelor in corporate administration and relations with honours in University Science Islam Malaysia, and my achievement, I got Dean's List for 3 semesters, and I have an experience as a sales advisor in ASHAN Corporation.
I am a financial manager for this company. My name is Siti ZUBAIDAH binti SAZALI. I am 29 years old. I am still single. My highest education is Master of Management Accounting at University of Melbourne. I have an achievement which is I am a member of Chartered Institute of Management CIMA, and I have an experience which is I have been a senior analyst at Bank Negara Malaysia.
This is the history of the Thundersley Sport Shoes Company. Thundersley Sport Shoes Company was established in July 2018 and started the small business at the beginning. The combination ideas among the 5 who share the same dream and interest made Thundersley Sport Shoes brand trending around the world, and we also with success to open our trend shoes for all ages to fulfill society needs in this era. The high determination and diligence make us achieve today our achievement and overcome the challenge through the journey to make the company have the same level with other shoes manufacturing companies. The main ideas of the business was to produce a high quality shoes to satisfy all the customer needs in terms of design, pattern, color, size, and equipment, and effort to open more stores to make Thundersleep Sport Shoes become a well-known company in Malaysia. The nature of the business of Thundersleep Sport Shoes is company of our manufacturing. They manufacture various designs of sport shoes suit to all ages. We sell to the customer high quality materials of shoes. There are varieties choice of sport shoes that we offer to the customer to choose according to their preference. Our shoes can be found in the most areas in Malaysia, from the small town to the shopping mall in the hectic downtown. The reason why we selected this business: we choose this business because we want to manufacture sport shoes that follow new trend and elegant fashions, packed comfortable material imported from trend pioneer and trusted supplier around the world. Our business will having a new buyer because we are surrounded by society that thirsts for new trend and fashions. We also provide unique, special, and limited design of shoes that customer can choose and purchase it with their own preference. We want to continue fighting for the wonderful privilege to wear the shoes of Malaysians family for long as we are allowed. This business also give a large income and can gain more profit. This is basic information about business market, location, and competition. Our main purpose in running this business is manufacturing branded and quality shoes for our customer. Our company located at Lot 100 Jalan Utama, Queen Business Park 43650 Seri Kembangan, Selangor. We choose this location because it is strategic location since there is a small number of company that provide shoes custom-made service in this area, and there are also houses area nearby. On the top of that, there were a few in the company and run a business to reach our target, which is earn more profit and give a high quality services. Why we think this business would be profitable? We think this business will be profitable because nowadays people make fashion as their main necessary in life. So that's why we choose to sell variety of shoes that customer can wear it everywhere and anytime they wanted to. In addition, we are manufacturing a large amount of sport shoes so that all of people out there can wear it and look fashionable at all time. We also design our manufactured shoes depend on the trend ongoing. We would make a higher profit in our business because it was high in demand in the market nowadays. How our financial decision will affect the business. Thundersleep Sport Shoes Company will earn revenue from the sales of shoes manufactured. So next, we moving to managerial accounting information. Type of product manufactured. Thundersleep Company sell fashionable shoes that follow the current trend, which is available for all ages, either old or young, male or female. Thundersleep Company provide many sizes of shoes and various colors that can be customized based on customers' needs and desire. Our company will advertise our bombastic shoes in social media such as Facebook, Instagram, and also create our own web store. So our beloved customer can look and choose by their own self. We also provide free postage for the online purchasing that encourage more customer and buyers to get the best shoes from us. Then we open our factory and can attract more customers to come in the middle of city that usually people use that way to enter the city. So our factory basically easy to be found because the place is strategically, and we put a big banner along the side road. The price is different according to the pattern and design. Besides, our shoes price range between 95 ringgit to 100 ringgit because the high quality fabric we use, and we very sure that our customer will be satisfied and they will repeat buying these trending shoes that cannot be found in other factories. So this is startup cost analysis. Cost of property is 1 million and the building is 500,000, machinery is 65,000 and the equipment is 30,000. So the total startup cost is 1,595,000.
I want to present about our company's accounting system. We choose process costing to finish this project. So we go through to the next slide. So here is managerial source document based on the managerial transaction. So I want to show you. First, this is an invoice copy for March 15 transaction, and then this is invoice original for March 1, and then this is a cash bill for March 25, and this is receipt for March 22. While this is material requisition for March 18, and this is memo for March 31. So first, I want to show you about our managerial transaction. For the date March 1, the description, raw materials totaling 240,000 were ordered prior to being requisitioned by each process 180,000 for the SAA process and 60,000 for the packaging process on account from Ruby Company. So the source document is invoice original. Number 2, March 4, is assume 180,000 worth of raw materials to the SAA process as direct materials. The source document is material requisition form original. For March 6, assume direct labor cost for the month of March with an average wages of 78,000 for the SAA process. Number 4, for March 8, manufacturing overhead are allocated to the SAA process at RM13 ringgit per unit. The SAA process required 9,000 units of items started. The source document is receipt. For March 12, incurred 110,000 in actual manufacturing overhead costs for the month of March in the SAA process. The source document is cash bill. For March 15, the cost of completed goods from SAA process, which comes to be 270,000, is transferred to the packaging process. The source document is invoice copy. Next, for March 18, assume 60,000 worth of raw materials to the packaging process as direct materials. The source document is material requisition form original. For March 20, assume direct labor cost for the month of March with an average wages of 28,000 for the packaging process. For March 22, manufacturing overhead are allocated to the packaging process at 56,000. The source document is receipt. For March 25, incurred 50,000 in actual manufacturing overhead costs for the month of March in the packaging process. The source document is cash bill. For March 28, completed goods from the packaging process transferred to finished goods. The The source document is invoice copy. For the last one, for March 31, recorded over applied manufacturing overhead to cost of goods sold at 13,000. The source document is memo. Next, we go through to the next slide, which is production report. So we go through to the production report for stamping, assembling and attaching SAA process for the month ended March 31, 2020. For units to be accounted for beginning work in process is 0, while the started into production is 9,000. The total units is 9,000, and the unit accounted for equivalent units for direct materials completed and transferred is 6,000, and the ending work in process is 3,000. The total is 9,000, while the conversion cost is 6,000, and ending work in process is 1,800. The total is 7,800. For cost of beginning inventory for direct materials, conversion cost and total cost is 0, while current period cost for direct material is 180,000, conversion cost is 195,000, and then the total cost is 375,000. And then for cost per equivalent unit, total cost for direct materials we divide by equivalent units. 180,000 divided by 9,000, we got 20 ringgit. Commission cost 195,000 we divide by 7,800, we got 25. So the total cost per equivalent unit is 45 ringgit. Then cost to be accounted for direct materials for beginning work in process is 0, commission cost is 0, and the total cost is 0. Well, for current period cost is 180,000, commission cost is 195,000, and the total cost is 375,000. Cost accounted for unit completed and transfer is for direct material is 120,000, and commission cost is 150,000, and the total cost is 270,000. For ending inventory, direct materials is 60,000, commission cost is 45,000, total cost is 105,000. So the total cost for direct materials is 180,000, commission cost is 195,000, and the total cost is 375,000 according to the production report.
Okay, I will explain about process costing production report. For packaging process, and we use weighted average method. Okay, first, physical units to be accounted for beginning work in process is 0 because we don't have any balance. Of unit to start in production. After that, unit to be accounted for starting into production was 6,000. So the total units 6,000, and then units for equivalent unit to be accounted is 4, which is direct materials and conversion cost. The units in ending inventory is 100%. So in respect to direct material, but only 60% complete for conversion cost. So we have to complete to separate the calculation to determine the equivalent unit for each as follows. So for unit accounted for direct material is 5,000, for conversion cost 5,000 too. For costing work in process is 1,000, which is 100% times 1,000, we get 1,000 ringgit for direct materials. And for conversion cost, ending work in process, we get 600 by multiplying 1,000 with 60%. So we get 600, and the total cost for total cost for equivalent units for direct materials are 6,000 ringgit, and for conversion cost 500 and 5,000 and 600. After that, for cost of beginning inventory for direct materials and conversion cost is 0 and total cost 0. So for the current period cost, direct materials is 60,000. For conversion cost is 84,000. So the total cost is 144,000. After that, for the equivalent units, we got indirect materials is 6,000 and conversion cost 5,000 and 600. The cost per equivalent units we calculate by 60,000 divide by 6,000, we got 10 ringgit, and 84,000 we divide by 5,600. For conversion cost we got 15 ringgit. So for the total cost per equivalent unit we got 25 ringgit. After that, cost to be accounted for direct materials and conversion cost is 0. For beginning work in process is cost to be accounted for beginning work in process for direct materials and conversion cost 0. For current period cost for direct materials is 60,000 and for conversion cost is 84,000. We got 60,000 by multiplying the total unit for direct materials, total unit for direct materials, and with cost per equivalent unit. So we got 60,000. That's for direct material, and for conversion cost, we get 84,000 by multiplying total unit for conversion cost with the cost per equivalent unit for conversion cost. So we got 84,000, and the total cost we got 144,000 for direct materials plus conversion cost. Okay, cost accounted for unit completed and transferred for direct materials is 50,000 ringgit, and for conversion cost 75,000 ringgit. We got 50,000 by multiplying completed and transferred indirect materials, which is 5,000 with the cost per equivalent unit, which is 10. For 10, so we get 50,000, and for conversion cost 75,000 we got by multiplying 5,000 with the cost per equivalent unit, which is 15, and then we get 75,000 for okay. Also, the total cost for direct materials and conversion cost in units completed and transferred is 125,000. And then for ending inventory in direct materials is 10,000 ringgit. We get 10,000 by multiplying ending work in process in direct material with the cost per equivalent units. So we get 10,000, and for conversion cost is 9 in work ending in inventory is 9,000. We got 9,000 by multiplying 600, and with the cost per equivalent unit 15, So we get 9,000 for conversion cost, and then the total cost for direct materials and conversion cost and ending inventory are 19,000 ringgit. So for total cost for direct materials are 60,000, for conversion cost 84,000, and total cost direct materials and conversion cost got 144,000. Okay, so I will explain about budgeted income statement. First, budgeted sales revenue, which is 600,000 ringgit. We minus with budgeted cost of goods sold, and then we got budgeted gross margin, which is 250,000 ringgit. After that, budgeted gross margin, we need to minus with budgeted selling and administrative expense, which is 160,000. We got budget net operating income, 90,000 ringgit. After that, cash budget. Cash budget, with the beginning cash balance was 100,000. We plus with budgeted cash receipt, which is 580,000 ringgit, and then we minus with budgeted cash payments, which is 694 ringgit. 94,480 ringgit. We got cash balance before financing, which is 14,480, and we need to borrow 110,000 ringgit. So we get ending cash balance 95,520. After that, budgeted balance sheet. First, asset. In asset, cash, account receivable, direct material inventory, finished goods inventory, property, plant, equipment. Okay, cash, we have 95,520. Account receivable 60,000. Direct materials inventory 59,480. Direct material finished goods inventory 300,000 ringgit. Property, plant and equipment 1,595,000. And the total all the assets are 2,110,000. And the liabilities, account payable 160,000. We and long-term liability 250,000 we plus, and then we got the total liabilities, which is 410,000. And the stockholders equity 1,700,000. We plus liabilities and stockholders equity, we got 2,110,000. Next is financial accounting information. First is source document. Memo for Thunderstream Company on 1 March. We start the business with the following asset and equity. First, equipment, we debit equipment 30,000 ringgit. We debit machinery 65,000 ringgit. Debit cost of property 1 million. Debit building 300,000. And last, we credit capital, which is 1,595,000. After that, invoice to Gazal Company on 7 March. The description about sport shoes, the quantity 2,500 and the price per unit 120 ringgit. So the total 300,000 ringgit. Okay. For cash bill to Thunderstream Company, the description is sport shoes. The quantity 1,500 unit. The price per unit is 120 ringgit. Total the total 180,000 ringgit with cash. Okay. Next receipt. Receipt on 18 March. Receipt from new company, which is 200,000 only on cash. And then credit memo to Ghazal company. Description about sport shoes, and the unit of shoes is 500. The price per unit 120 ringgit. The total price 60,000 ringgit on 11 March. And then voucher to TNB Malaysia on 22 March, which is utilities. The total 80,000. The total are 8,000 ringgit. Next is transactions. Okay, so I will explain about budgeted income statement. First, budgeted sales revenue, which is 600,000 ringgit. We minus with budgeted cost of goods sold, and then we got budgeted gross margin, which is 250,000 ringgit. After that, budgeted gross margin, we need to minus with budgeted selling and administrative expense, which is 160,000. We got budget net operating income 90,000 ringgit. After that, cash budget. Cash budget, with the beginning cash balance was 100,000. We plus with budgeted cash receipt, which is 580,000 ringgit, and then we minus with budgeted cash payments, which is 694 ringgit. 94,480 ringgit. We got cash balance before financing, which is 14,480. And we need to borrow 110,000 ringgit. So we get ending cash balance 95,520. After that, budgeted balance sheet. First, asset, cash, account receivable, direct material inventory, finished goods inventory, property, plant, equipment. Okay, cash, we have 95,520. Account receivable 60,000. Direct materials inventory 59,480. Direct material finished goods inventory 300,000 ringgit. Property, plant and equipment 1,595,000. And the total, all the assets are 2,110,000. And the liabilities, account payable 160,000. We and long-term liability 250,000 we plus, and then we got the total liabilities, which is 410,000. And the stockholders equity 1,700,000. We plus liabilities and stockholders equity, we got 2,110,000. Next is financial accounting information. First is source document. Memo for Thundersea Company on 1 March. We start the business with the following asset and equity. First, equipment, we debit equipment 30,000 ringgit. We debit machinery 65,000 ringgit. Debit cost of property 1 million. Debit building 300,000. And the last, we credit capital, which is 1,595,000. After that, invoice to Ghazal company on 7 March. The description about sport shoes, the quantity 2,500 and the price per unit 120 ringgit. So the total 300,000 ringgit. Okay. For cash bill to Thundersea company, the description is sport shoes. The quantity 1,500 unit. The price per unit is 120 ringgit. The total 180,000 ringgit with cash. Okay. Next receipt. Receipt on 18 March. Receipt from new company. Which is 200,000 only on cash. And then credit memo to Ghazal company. Description about sports shoes. And the unit of shoes is 500. The price per unit 120 ringgit. The total price 60,000 ringgit on 11 March. And then voucher to TNB Malaysia on 22 March, which is utilities. The total 80,000. The total are 8,000 ringgit.
Transaction at March 11, we issued credit for the journal. For the 1st March, we start the business with the following assets and equity. We will debit equipment, machinery, cost of property and the building at 30,000, 65,000, 1 million and 500,000. So, by adding this debit amount, we will get the credit amount for the capital, which is 1,595,000. At March 3rd, to record the sale of 1,500 units, we debit cash at 180,000 and credit sales revenue at 180,000. To record the manufacturing cost of items sold, we debit cost of goods sold at 105,000 and credit finished goods inventory at 105,000. For the March 4th, we purchased a new truck, and for that, we will debit delivery truck at 558,500 and credit cash at 58,500. For the March 7, to record the sale of 2,500 units, we debit accounts receivable Ghazal company at 300,000 and we credit sales revenue at 300,000. And to record the manufacturing cost of items sold, we debit cost of goods sold at 175,000 and finished goods and credit finished goods inventory at 175,000. Okay, for March 9, we debit advertising expense at 1,500 and credit cash at 1,500 to pay advertising expense. For the March 11, we issued credit memo for 500 units of sports shoes returned. We debit sales returns and allowances at 60,000 and we credit accounts receivable Ghazal company at 60,000. To record the manufacturing cost of items returned, we debit finished goods inventory at 35,000 and credit cost of goods sold at 35,000. Okay, for the March 19, to pay sales salaries and office salaries, we debit sales salaries and office salaries at 3,600 and 4,800. After that, we credit cash at 8,400. Okay, for March 15, we debit delivery expense at 500 and credit cash at 500 to pay shipping costs on items sold. For March 16, we debit repairs and maintenance expense at 900 and credit cash at 900 to pay for a tune-up of a delivery truck. For the March 18, for the next ledger is delivery as the next ledger is cash.
For ledger raw materials inventory, accounts payable Ruby Company which is 240,000 in debit, and in credit there are work in process inventory for SAA process, and there is work in process inventory for packaging process. Total this up, then get 240,000. So 240,000 is the balance amount of raw materials inventory. Okay, for ledger work in process inventory, SAA, stamping, assembling and attaching process. In debit there is raw materials inventory which is 180,000, wages payable 78,000, manufacturing overhead 117,000, in credit work in process inventory packaging 270,000. But if you adding this up, you will get 375,000 in debit, but in credit you don't get the amount, so you will put balance CD which is 105,000 in credit. So there will be balance BD in April 1 which is also 105,000. For wages payable account, the normal entries is credit, so you will put the item in credit first. Work in process inventory SAA and work in process inventory packaging. Work in process inventory SAA 78,000, work in process inventory packaging to 28,000. If you add this up, you will get 106,000. But there is no items in debit, so you just put balance CD in debit which is 106,000, so you will get balance debit and credit. For balance CD, you will extend it to April 1 which is will be balance BD 106,000. Okay, next, manufacturing overhead account. There will be debit cash 110,000, also cash 50,000, and cost of goods sold 13,000. In credit, there will be work in process inventory SAA and work in process inventory packaging. For work in process inventory SAA, it is 117,000. Work in process inventory packaging is 56,000. So if you total this up, then you will get the balance amount for debit and credit which is 173,000. Work in process inventory packaging. The work in process inventory SAA 270,000, raw materials inventory 60,000, wages payable 28,000, manufacturing overhead 56,000. That is in debit. And in credit, finished goods inventory which is 350,000. And if you total the debit and the credit, you will not get the same amount for debit and credit. So 414,000 you will minus 350,000, so you will get balance CD, which is 64,000. You will extend it to April 1, which is balance BD, also 64,000. So now I will show you our company trial balance. Thundersley Sports Shoes unadjusted trial balance March 31st, 2020. First, equipment 30,000, machinery 65,000, cost of property 1 million, building 500,000, and capital in credit 1,595,000. Then delivery truck 58,500, advertising expense 1,500, cash 248,050, delivery expense 500, utilities expense 8,000, cost of goods sold 302,000, sales revenue in credit 600,000. Okay, then in debit, miscellaneous administrative expense 1,500, account receivable Ghazal Company 40,000, office supplies expense 650, repairs and maintenance expense 900, sales return and allowances 60,000, sales salaries 3,600, office salaries 4,800, sales discount 12,000, finished goods inventory 35,000, work in process inventory SAA, stamping, assembling and attaching 105,000, wages payable in credit 106,000, work in process inventory for packaging process is 64,000, and last but not least, accounts payable for Ruby Company credit 240,000. Okay, if you total debit and credit, you will get the same amount, which is 2,541,000. Next is income statement. Thundersley Sports Shoes statement of comprehensive income for the month ended March 31st, 2020. Revenue from sales. Sales is 600,000 minus with sales return and allowances, also sales discounts. But first, you must add these two up, 68,000 and 12,000 plus. Then you will get 72,000. Sales minus these two, which is 600,000 minus with 72,000, you will get 528,000. That is net sales. For cost of goods sold, 302,000. Net sales minus with cost of goods sold, you will get gross profit. Gross profit is 226,000. Okay. Next, operating expense. Operating expense is divided by 2, selling expenses and administrative expenses. First, selling expenses, there are 6 salaries expense 3,600, advertising expense 1,500, delivery expense 500, utilities expense 8,000, repairs and maintenance expense 900. If you total this up, you will get total selling expenses only, which is 14,500. For administrative expenses, there are office salaries expense 4,800, office supplies expense 650, miscellaneous administrative expense 1,500. Total this up, you will get total administrative expenses 6,950. total administrative expenses and total salary expenses, you must add these two. You will get to 21,450. That is total operating expenses. Gross profit minus with total operating expense, 226,000 minus with 21,450. Minus this up and you will get 204,550. That is the net profit for our company. Balance sheet. Tandesley Sports Shoe Statement of Financial Position for the month ended March 31st, 2020. First, assets. There are non-current assets and current assets. In non-current assets, there are property, plant and equipment, which are equipment 30,000, machinery 65,000, cost of property 1 million, building 500,000, delivery truck 58,500. Total the non-current asset, you will get 1,653,500. For the current assets, there are cash 248,050, account receivable 40,000, work in process inventory packaging 64,000, work in process inventory for SAA 105,000, and last finished goods inventory 35,000. Total the current assets, you will get 492,050. Total non-current assets plus with total current assets 1,653,500 plus with 492,050 plus these two, you will get 2,145,550. That is for the total assets. Okay, then the equity and liabilities. For equity, there are capital and retained earnings. Capital 1,595,000. For retained earning 204,550. Total these two, you will get the total equity 1,799,550. For current liabilities, accounts payable 240,000, wages payable 106,000. You will get the total current liabilities 346,000. Total these two, you will get 2,145,550, which is for the financial position, you will get the same amount with assets and equity and liabilities, which means our financial position is balanced. For break-even analysis, first you must find the unit variable cost. For unit variable cost, you will get 12 ringgit and 51 cents for each unit variable cost. Then unit contribution margin. Unit contribution margin is price minus with unit variable cost. The price for each shoes we sell is 120. minus with unit variable cost, which is 12 ringgit 51 cent, you will get 107 ringgit Malaysia and 49 cent. For total fixed cost, we add the wages payable, utilities expense, advertising expense, plus sales salaries plus office salaries. For wages payable, 106,000. For utilities expense, 8,000. For advertising expense, 1,500 plus sales salaries is 3,600 plus office salaries 4,800. Then the total fixed cost is 123,900. Then break-even unit. The formula is total fixed cost divided by unit contribution margin. The total fixed cost we find earlier, we get in RM 123,900. So divide with unit contribution margin, which is 107 ringgit 49 cent. You will get 1,153 unit. That is the break-even unit. Next, total contribution margin. The formula is sales minus with total variable cost. The sales for our company, we get 600,000 minus with total variable cost is 62,560. Then you will get the total contribution margin, which is 537,440. Next, contribution margin ratio. The formula is unit contribution margin divided by unit sales price. Unit contribution margin is 170 ringgit 49 cent divided by unit sales price, which is I told earlier is 120 for each shoes. Then you will get 0.8958. 0.8958 you must multiply by 100%, then you will get 89.58%. That is for the contribution margin ratio. For break-even graph, our break-even unit is 1,153 here. In number of units, we get total revenue more than total cost, which is we get profit for our company for that month, which is March 2020. Last but not least is our company performance. Company performance. Based on the break-even analysis, we found that our company business get profitable as we first expected. This is because we sell 5,000 units, more than break-even units 1,153 units, means that our company would be making a profit on the units sold. From that, the managers can determine that company must sell more than 1,153 units to cover fixed and variable expenses for a month, because the break-even point is often referred to no profit or no lose points. Okay. Second, the improvement that we can do to improve the possible outcome for our company is advertising our product in all platforms of social media. For example, we will create our own Facebook, Instagram, Twitter pages to influence more customers. From this method of advertisement, we can reach customers from all over the world. Other than creating social media pages, we are going to create our own online website store so the customers can buy our shoes easily. Because when we are doing business online, people can just buy our shoes without going out from their home or work. In addition, we can expand our business more bigger by providing more choices to our customers in terms of types of shoes. For example, we can produce hiking shoes, soccer shoes, basketball shoes, and skating shoes. Because right now we are producing only one type, maybe we can expand the business. We provide more than one type, so that the athletes can buy from us and we can become the top supplier of sports shoes to our national athletes. That's all from us, Tandersly Sports Shoes Company. Thank you and bye-bye.